Welcome to the C-Suite series presented by Channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on Channelchek. Today's interview features Forbes Global Media. Noble Senior Research Analyst Michael Kupinski interviews Forbes CEO Mike Federle and CFO Mike York. Visit channelchek.com or click the link in the description to access an exclusive SPAC report on Forbes and Magnum Opus Acquisition Limited, NYSE ticker symbol OPA. And now, here's Michael, Mike, and Mike.
Well, thank you for joining us. I am very excited to have the Forbes management team join us today. First, we have Mike Federle, the CEO. He's been with Forbes for 10 years. And of course, we have Mike York as well. The Chief Financial Officer is also joining us. Both of you have a tremendous experience in the industry before joining Forbes. And let's start with Mike Federle. You've been credited for significantly growing Forbes outside of the print business, leading the strategy to license Forbes outside of the United States, creating brand extensions into education and financial services. In other words, you created a global media growth company. And I was wondering if you can talk a little bit about your background and tell us what brought you to the company.
Yeah, well, thanks, Michael, and thanks for having Mike and I here. I've been in the industry for 30 plus years, and a lot of people think that the rate of change has accelerated just recently. But it has been an industry of constant innovation for all those years I've been in it. And that's actually what's kept me really engaged and interested in the industry, and really makes it exciting. And Forbes is certainly no exception to that. 10 years ago, or more like 11 or 12 years ago, Forbes invested in a startup I did. When I went out looking for early round capital, they invested in it. They asked me to eventually come over and help with the transformation of Forbes. My first task was to really focus on how do we pull in and develop new recurring revenues that are non-advertising related. So to start changing the mix of the pie, so to speak, and also to really accelerate and partly pay for this digital transformation, which has really been our story over the last decade and puts us in a place today where we have really tremendous opportunity ahead of us. So that's it in a nutshell. I could go on for several days, over 30 years if you want, but I'll stop there and let Mike give a little explanation of his background as well.
Yeah, Mike York, I was wondering if you could tell us a little bit about yourself and your background and what brought you to Forbes.
Well, I've been at Forbes for almost 20 years now, so I don't really recall what brought me there. It's been so long, but the first 10 years I was kind of in the back office doing the accounting and the bookkeeping, and the last 10 years I've very much been in the operations, with Mike and the rest of the team, and just really happy to be here and talking to you today.
Well, thanks, Mike. You're gonna enjoy being a public company, I believe. So tell us about Forbes as a company today. What's your mission and what is your vision, Mike? If you can start there.
Yeah, absolutely. As I said, I started 10 years ago, and I have a long history in kind of the business, finance, media world, having spent a big chunk of my career at Time Inc., Time Warner, AOL, Time Warner, developing new products there. And when Forbes first approached me and said, "Hey, come join us, we're really doing interesting things," my initial reaction is, why the heck would I want to jump back into that category and not, where I've been for all those years? And the answer I quickly got when they said, "Well, just come talk to us, let us tell you what we're up to," was intellectually, everyone in the industry knew you had to change, knew the world was changing, digital was taking over, and yet emotionally, a lot of people couldn't get there. A lot of companies couldn't get there. They couldn't give up on what had brought them to the place where they were and the success they've had in the past. Forbes was willing to really be very, no nostalgia for anything that happened in the past, and to think only forward. And really what I say is to bet the ranch. Because at the time, the family literally was betting the ranch on a new model for Forbes. That was a very radical model at the time and very innovative in the industry. And it created a stir in the industry. We initially got a lot of criticism for taking a great 100-year-old brand into such a new radical sort of model. It took about 18 months before the syndicated research and the results of what we were doing began to show themselves. And then in 2013 or 2014, I bet I spent 40% of my time meeting with media companies from around the world who were asking, what is it you're doing? What's the secret sauce? Because Forbes is growing by leaps and bounds, while a lot of former competitors and other media companies are struggling to figure out what's going on. So it's that that innovative spirit, I think, is really kind of the key to what we're all about.
Well, I think it's a fascinating story, and I'm sure that people at Harvard and a lot of these universities are going to do case studies on how you transitioned, because it is fascinating that the company transitioned from to digital, and digital was more than their print business back in 2013. I mean, there are media and traditional media companies that are still not there, and so I think that that's quite fascinating. So Mike York, give us the financial profile of Forbes. What are the revenues? What is the EBITDA? And maybe you could talk a little bit about the growth rates.
Yeah, absolutely. Happy to. And kind of hot off the presses, our first full year press announcement went out last week. And, a few highlights. Revenues at $259 million, which was a 40% increase over 2020 and 23% ahead of pre-pandemic levels. So say 2019. Our EBITDA was at $60 million, which was an 89% increase over 2020, 52% ahead of pre-pandemic levels. And our EBITDA margin finished up at 23% versus 17% and 19% in 2020 and 2019, respectively. And the great thing is that this growth is really in the three core areas of business that we talk about. So the first area would be media. So think of traditional advertising. The second is brand extensions, so think licensing, event sponsorships. And the third would be consumer facing, so think recurring revenue from gated content and more cost per action revenues from our e-commerce business. Over the first 100 years, Forbes has really been heavily relying on that media category. And over the last 10 years, we've been able to grow and diversify our revenues into higher margin businesses, which would be the brand and the consumer. And thus we're less reliant on the media business. And over those same 10 years, we've been able to grow our top line revenues 14% on a CAGR if you exclude our print business. And this growth really has all been funded by our internal cash flow that's been reinvested into the business. So we're at a great time right now, and Mike and I are excited to have a little bit more liquid capital to kind of put in the business and really scale our business going forward.
Great, and hopefully we'll talk a little bit more about that later. So all media companies were adversely affected by the COVID pandemic. And let's talk a little bit about how Forbes fared, because looking at the numbers, I'm surprised that you fared as well as you did compared to the rest of the media that really struggled. So can you talk a little bit about the COVID experience?
Yeah, well, like the rest of the world, we went into it suddenly and were forced into this great social experiment that both working remotely and just under the cloud of a global pandemic. So we quickly established that our business could operate very effectively, very efficiently remotely, and we were quite encouraged by the productivity that we were able to do. But the greatest learning, I think, that we found out during COVID was how well balanced our business was. And by that, I mean, on the advertising side, we had a fully developed programmatic business, which we were always believers in programmatic as being an important component of the advertising mix. whereas a lot of media companies kind of saw that as an afterthought or kind of the incremental sale of inventory that was left over. We always made it an important component. And so when COVID hit and you had the direct high value advertising of banner ads and direct ads onto the site, when those advertisers took a break in 2020 because of the pandemic and they were trying to retool their messaging and figure out exactly where the world was going, our programmatic business was able to step in. And it stepped in with a real accelerant in that we also found that Forbes content was more valuable than ever before in terms of people were seeking out trusted content on, what is the health issues involved in the pandemic, the economic issues in the pandemic, business issues, career issues. All of this was part of kind of the content that we generate. And what we saw beginning in March 2020 and really throughout all of 2020 and into the beginning of 21 was this incredible surge in traffic. And so that really brought home to us that in times of disruption, people tend to go towards those sources they trust most because the information becomes that much more important. And so as a result, the mechanics of advertising and programmatic, which is based on the number of page views available, and really made up for the shortfall in direct, which was early in 2020. And then by the third and fourth quarter, the direct advertising started to come back very strongly. And we were able to play with both those levers, which resulted in a year that we could have never imagined in March when we went into the unknown. So it turned out to be both a great sort of final result, but also a really interesting lessons in terms of how our business can operate.
Well, kudos to you, because a lot of traditional media companies didn't embrace programmatic until what you just happened, but you had already positioned for programmatic. Most media companies were just putting remnant advertising in there. So that was a great strategy. So there seems to be a large number of levers that the company has for growth. And I was wondering if you could talk a little bit about what do you believe is Forbes' biggest opportunity for growth?
We do have a lot of opportunities for growth, and I'll talk about it this way. One, our core business of advertising, as Mike said, we're in this great high growth, high margin, cash generating business model that it is working, and it's working in that first bucket of media, as Mike said. And that also puts us on a little different track than a lot of media companies who look at the advertising and media portion of their business as not the future for them. We're very much believers that we can continue to grow advertising and make our audience more valuable to advertisers, thus increasing CPMs and the rates we're able to charge for it. But in addition to that, we're in the midst of this, big consumer conversion, and that's a result. People say, "Well, why now?" And the 10 years, the last decade, has been all about this really tremendous digital transformation we were able to carry through very successfully. You mentioned by 2013 we had already crossed the line of digital to print. And today we're a little more than 5% print in our mix. And it's not that we dislike print, it's just that the consumers want to consume content across all the channels that we play in. And so we're now a fully formed digital media company. And underlying all of that, and part of the success that we've had, is we've built out a very sophisticated proprietary tech stack and foundation to our business. Part of that includes our first-party data and big data pools, so that we're able to create the data and analytics that will help us to steer product development going forward. So over that 10-year period, not only did we do that digital transformation, we have built an audience of 150 million monthly uniques across our ecosystem. So we're a digital business of scale as well. And now with that scale and with data and analytics, we can start segmenting audience cohorts and create very bespoke product that we can charge for and generate a whole new revenue line of consumer that we don't currently have. So we're thinking about consumer a little differently than everyone else as well. It's not a hard paywall strategy. We'll have some paywall in there, but it's not a hard paywall strategy. It's a premium product strategy and premium kind of experience strategy that we'll be able to create and charge money for.
So the brand extensions are an interesting aspect. You know, Forbes has such an iconic brand that you can almost take that anywhere, even if you decide to do an OTT channel, you know, using the Forbes brand name, maybe even a cable channel using it, you know, because as I am, of course, and I know there's a lot of people like me, are big consumers of business news and so forth. Do you see yourself moving in that direction to create even more of an omni-channel presence?
Yeah, no, well, thanks for asking, Michael. Absolutely. I look at it at a couple different levels. One on kind of the broadcast level. You know, it was in 21 that we launched fully on breaking news on the YouTube channel, the Forbes YouTube channel. And I recently got a plaque from YouTube saying we have now crossed some astronomical number that if you laid it end to end, we'd go to the moon and back in terms of our audience. It literally was laid out that way. But it was very nice from Susan Wojcicki to send it. But what it is, again, you put the Forbes brand, the trusted content, in this case in video form, and on a platform like YouTube, and we quickly surpassed over 1 million subscribers in the course of the years to that. So that's just one example. We've also got a partnership in a production company and have produced several documentaries. The first one on WeWork, which is streaming on Hulu. It launched last year at South by Southwest, then streamed on Hulu, won several awards. And we've got 2 other documentaries in the works there. So we're exploring channels like that, but really huge opportunities that we have are in that middle bucket of the branded businesses that Mike York had mentioned. And we already have these proof cases of where you put the Forbes brand to a business, it can really accelerate it. And whether it's the Forbes School of Business and Technology in partnership with Arizona State University's Global Campus, or Forbes Travel Guides, which is a measure of, it's the only global standard measure of luxury 4- and 5-star hotels around the world. You put that Forbes name in with the business and it can really jumpstart the business and grow. And that, I think, becomes a proof point for us that why not take those licensed businesses and make them fully owned or partly owned JVs where we have a big equity stake in them rather than just a mere license agreement with them or a license fee every year. So there's a lot of different avenues in which we can go down, or as you said, levers we can pull to really grow our business.
It's really exciting. So let's talk about the company going public. They're going public through a SPAC merger with Magnum Opus Acquisition Limited. The stock symbol is OPA. Can you give us a little rundown on the SPAC and give us some details?
Yeah, absolutely. So, Forbes has been owned by Integrated Whale Management out of Hong Kong have been great partners, have very much been investors and allowed me and the management team to really operate the company. And we've done very well for them. And we have entertained over the years many people coming to us interested in either investing or buying the company outright. And so about a year ago, as we started to talk seriously about what Forbes needed to really live up to what is an internal mantra we have at Forbes and among my management team, that we've got a brand that is this big, we have a business that is this big. How are we going to make, and let's make the business to be as big as the brand. And in order to do that, we feel we needed capital. We needed new access to capital to really be able to achieve all of the different things we want. And that's when Opus stepped in. And Opus, I should say, it's a little different than a lot of, it wasn't like a open market for who wants Forbes. It was really what we call a principal to principal deal, meaning the current owners talking directly to the SPAC. We liked the SPAC because their thesis of what they were looking for really, we fit the bill perfectly. So we were very simpatico in terms of what we saw as a potential for the company. And they very much saw the potential of this growing the business to be as big as the brand. And so over the last, as you know, these processes take on lives of their own. I've met lots of lawyers, lots of bankers, lots of everyone along the way, and it's been a learning experience for us. But it's also been a great experience to get to know John Lynn, who's the CEO of Opus, and Frank Hahn and Kevin Lee, who are the three principals there. So we've really grown to respect what they're trying to do. They respect what the management team here and what we're trying to do. So we're looking forward to closing the deal in the first quarter still, which we're kind of in the final stretches. As everyone knows, the SEC is making sure to dot their I's and cross their T's these days a little more stringently than at the beginning of when we first announced this, but we're on track to make that happen.
Mike, you had a recent investment from the largest crypto exchange in the world. Could you discuss that strategic investment?
Yeah, no, thanks for asking. We're really excited about this. Binance, the largest exchange in the world, they put in $200 million strategic investment into our $400 million pipe. So the pipe remains $400 million. They're coming in locked up for a year, which again is another sign of their aligning with our longer-term commitment to Forbes. And strategically, it a clear synergy with what Forbes is doing. Forbes first started covering crypto back in 2012. So we've been there from the beginning in terms of trying to explain to people what this means for the future of finance, what it means for the future of currency, but increasingly expanding across all digital assets. So anything built on blockchain, whether it's NFTs, the metaverse coming on, Web3, these are all major subjects that we have covered and will continue to cover. We see Forbes has been this great bridge between what I call the crypto committed, those who are already deep into crypto and into Web3 and DeFi, and it bridges from that group to the crypto curious, who are those people who are dipping their toe in the water and trying to figure it out, to what I call the crypto uninitiated, which is obviously the rest of the world and is the much larger group. Not unlike, if you think about it, and if you're old enough to remember the 1984 Super Bowl, there was the most iconic commercial, one of the most iconic commercials in history, when Apple did this famous commercial of the woman throwing the sledgehammer at the old mainframe industry, and it ushered in the beginning of the PC and the personal computer on every desk. And if you now jump forward to the 2022 Super Bowl, the world's largest advertising platform, what did you see there? You saw advertising from Crypto.com, from FTX in there, from Coinbase. It again is, we feel there are parallels between that 1984 as the launching pad of PCs and 2022 as the mainstreaming and launching pad of Web3 and digital assets. So we feel we have a huge opportunity going forward, working strategically with a group like Binance, who has the network and the scale and the relationships and are deep in the business to help steer us, as well as to help develop kind of the storylines that are important. So we see this as really a gigantic opportunity for us. So thanks for asking.
Thanks. So Mike, was the rationale going public then just bringing in cash, or do you see other benefits? Like, do you think that there might be acquisition prospects and you might want to, look at the equity, and from that perspective, what were some of the other rationale behind going public?
Yeah, no, the rationale for it is very much multi-layered. Now, what we've presented to investors is an organic growth plan, and we can make the growth numbers that Mike York's been mentioned up top. That can all happen organically, and that's where we feel very good, where we've created this momentum for the company right now across those three buckets of business. But of course, the whole industry is consolidating. There are tons of opportunity out there for strategic acquisitions or partnerships, all sorts of different mergers that do require capital to compete in those, because there are others competing in them. And in the past, when we've made forays into rather what were significant acquisitions for us, we really found ourselves to be less competitive than private equity out there and all of that. So we will look opportunistically at acquisitions. I guarantee you there's lots of interesting targets out there, and I do see that as becoming a good part of the mix as we go forward.
What's also interesting about that comment is that the M&A market, as you mentioned in your presentation material, has been robust, and the M&A transaction prices have been quite compelling. And I encourage people to take a look at our research report to look at those valuation metrics. It really does point the value that you would be that you would see in the stock price where it's at today. So Mike York, can you update us a little bit about the merger? What's the valuation? Talk a little bit about the breakdown for capital deployment and maybe use of proceeds.
Sure. Yeah. So the deal is valued at $630 million net of tax benefits, or NOLs of $55 million. And with that, on day one, we should have $145 million of cash, to go forward effectively and utilize to with our organic growth strategy, or as Mike mentioned, to kind of enter the M&A market. We have a little bit of liquidity to kind of help that process. We also are very under-levered. We have a small loan on the books, but we can go up quite a bit. And I think the combination of those two is really compelling for us to kind of identify these areas that we can really accelerate growth.
So with that, Mike, this is Mike, and I'd like to thank you for your time today. As we have learned, Forbes is a dynamic, growth-oriented media company. And for our viewers, if you'd like to learn more about Magnum Opus and the upcoming merger with Forbes, I would encourage you to take a look at my recent research report, and that's under the stock symbol OPA. And while we didn't have much time to talk about the valuation in detail, I think you'll find the tables that we have in that research report very compelling and give you a highlight of the prospect for some attractive appreciation potential with the OPA shares. Please read the report for important disclosures, which can be found, and that report can be found on channelchek.com, channel, C-H-A-N-N-E-L, check spelled C-H-E-K.com, again, under the symbol OPA.
Thank you for joining us for this C-Suite interview presentation brought to you by Channelchek. View our YouTube channel for more video content, including C-Suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.